November 2022 has been an exciting month, and I'm happy to report it's been exciting in a good way. Earlier this month, the Fed released their inflation data, the core CPI data, and the numbers came back much more favorably than anticipated. And this shock in the market actually was a good shock in that it appears inflation may have kind of turned the corner here, and that the actions taken by the Fed are starting to take hold. However, the Fed was pretty quick to rain on our parade, and they quickly reminded us that the additional rate hikes are on the horizon. We're not out of the weeds yet. The pace at which we'd seen inflation and the levels we were at do take time to get on top of and ultimately see a reversal. And what that really means is they want to see less consumer spending, they want to see higher unemployment rates, and that sounds very aggressive and bluntly stated. But the Fed's argument is the opposite of that. So runaway inflation is much worse than some short-term pain in the financial markets and also kind of on the streets as consumers. So overall, the data and the reaction from the market was terrific. We really didn't expect to see any type of movement like this within the year of 2022. We were cautiously optimistic for early 2023. So it appears we may have hit a promising point earlier than we thought. So what's next? What's on the horizon? As we look into December, we're going to go right back through the whole cycle again, and that is the Fed on the 13th will look at inflation numbers, so core CPI, and then the reaction to that data will come out on the 14th. It's anticipated that they'll raise the Fed funds rate 0.5%. If the reading comes back high, there's a chance they could raise the Fed funds rate 0.75%. I think that's where the market would react negatively. It's already assumed, I believe, that the Fed will raise the Fed funds rate 0.5%, and that's accounted for in kind of the rates and bond levels you're seeing. But shock is really where you see the reaction, and that would be that 0.75% raise. There is still opportunity in the market, and I think we're in this window of opportunity that'll last until the buying season of 2023 kicks in. I don't think by any means we'll have solved the rate issue by kind of that time, but the seasonality of kind of buying and selling, I think will kick in early 2023, and we're going to see quite a bit more demand. So if you want to find that perfect property and understand the idea of financing isn't perfect now but can be fine-tuned down the road, I think now is the time to consider that approach. I'm Michael Shotnik with Sierra Pacific Mortgage, here to help with your mortgage and or real estate needs. Give me a call, shoot me an email, send me a text. Would love to connect and be of assistance.